My name is Widya Oktafitriani. In this video I want to discuss about the nature of receivables is divided into two, namely trade receivables and other receivables. Trade receivables are receivables derived from the sale of goods or services on credit in the company's main activities. Other receivables arise from transactions outside normal operations, such as loans to employees or other parties. Examples of receivables include trade receivables and notes receivable as the main receivables, employee receivables, which is money loaned by the company to employees, interest receivable, which comes from unearned interest income, advances, which are paid in advance before goods or services are received, refundable deposit, which is a refundable security deposit to assess internal control over receivables and related transactions such as sales and cash receipts. 2. To assess whether the receivables listed actually exist and are authentic. 3. To assess the possibility that the receivables can be collected, and whether the allowance for doubtful accounts is sufficient. 4. To assess whether there are conditional obligations, for example discounted notes receivable. 5. To assess whether the receivables have been presented in accordance with applicable accounting standards in Indonesia. Impairment of receivables according to the applicable PSAK. Impairment of receivables is recognized when there is an indication that some or all of the receivables are uncollectible. Loss estimates are based on historical experience, the debtor's financial condition, business prospects, ability to pay, and collateral held. If the fair value of receivables net of costs to sell is lower than the carrying amount, the difference is recognized as an impairment loss. If in the future the value of receivables recovers, the value can be recovered, but may not exceed the original carrying amount before impairment. Assess the internal control of receivables and sales transactions. 2. Develop a schedule of receivables, top schedule and supporting schedule. 3. Make an aging schedule and test the accuracy of the calculation. 4. Perform test checks on receivables from receivables cards and invoices. 5. Send confirmation of receivables to customers, positive/negative. 6. Checking payments after the balance sheet date. 7. Checking notes receivable and possible conditional obligations. 8. Evaluate whether the allowances established by the client are sufficient. 9. Perform sales cutoff test. 10. Review sales invoices that were canceled in the following period.